Well, in 1980, COMEX was silver. And now COMEX and Shanghai are silver. And clearly, Shanghai is dragging COMEX higher. Now, let me go you one better, because I like to talk about things that people don't understand and people don't cover. There is a giant risk in the markets right now that nobody's talking about. Clearly, this is a monetary reset, but we need to talk about who's getting hurt, because somebody's getting hurt that nobody's mentioning.
The dollar?
No, gold has blasted right through 5,000. Silver blasted right through 100 on Friday. And the big question is, who's manipulating it? Shanghai silver price is 123, and that's just sucking the price of silver in COMEX higher. And you know how I feel about manipulation. All financial markets are manipulated. It's meaningless. There is no such thing as a free market unless you want to go to Zimbabwe. But in this case, this is one of the greatest manipulations I've ever seen. They're just manipulating the price higher. And I would blame the attack on Venezuela, the attack on Iran, and the attack on Canada as being part of the issue. And I've never seen a move like this, and I think it's historic.
Investors often focus on market risk. What happens if the price drops? Yet counterparty risk, the chance that the party on the other side of a trade cannot fulfill obligations, is far more dangerous right now. For example, a single silver contract can swing in value by millions, yet these gains can evaporate if currencies or counterparties collapse. Recent silver movements have been staggering. In just a month, silver surged more than 50%, an event almost unheard of historically. While headlines celebrate price jumps behind the scenes, financial devastation could be unfolding, with some traders facing enormous losses that the public barely notices.
Here's what's interesting, and I am actually a big fan of corrections. I believe strongly in sentiment, and the sentiment gets too bullish at times, it gets too bearish at times, and if you look for the turns, you can do very well. And these moves are historic, and there should be corrections, but the corrections last for a day or two, and they're 10 or 20 bucks in gold and 50 cents or a buck in silver, and then it's right back up. I believe there is a sea change. This time it is different, and strange enough, I don't think you can put a top on either silver or gold. Well, in 1980, COMEX was silver. And now COMEX and Shanghai are silver. And clearly, Shanghai is dragging COMEX higher. Now, let me go you one better, because I like to talk about things that people don't understand and people don't cover. There is a giant risk in the markets right now that nobody's talking about. Clearly, this is a monetary reset, but we need to talk about who's getting hurt, because somebody's getting hurt that nobody's mentioning.
The dollar?
No.
Gold and silver may dominate headlines, but the commodities landscape is broader. Platinum, palladium, and now copper are signaling critical economic shifts. Copper, dubbed Dr. Copper, forecasts industrial growth, while silver and gold respond more to sentiment and monetary dynamics. The surge in precious metals has spread from majors to mid-tier miners, highlighting which sectors are heating up. Investors are increasingly turning to junior mining companies, where small capital can yield massive returns. These stocks act as early indicators of broader market tops, and the current environment shows no signs of reaching one yet, leaving potential for further historic gains.
Okay, let me
Japan?
give you a scenario. You look at the price of silver in the chart and the history, and you say, I like silver. And you go buy one contract, 5,000 ounces of silver. And the next day, California, Washington, Oregon fall into the ocean because of a big fault. Silver goes up $100. So you've got 5,000 ounce contract. You've got a $100 increase in the value of silver in one day. How much money do you make?
You probably don't make any money at all in real terms.
Why? Well, not in real terms. You don't make any money at all. Why?
Because the value of the overarching currency has collapsed.
No.
Why is it?
There's two kinds of risk. One is market risk, okay? What if you're wrong? What if you buy a contract of silver and the price goes down? You lose money. That's market risk, and that's the risk everybody pays attention to. But somebody is on the other side of the trade. If you multiply $100 an ounce times 5,000 ounces, you get a very big number.
5 million.
What if the counterparty
Or no, it's 500,000.
cannot belly up to the bar? Counterparty risk right now is probably greater than market risk. Think about the people who were selling naked calls a month ago. Now, do you track how much silver got up in the last month? Do you know?
I could look it up really quick. The last 1 month,
Physical silver and gold remain the cornerstone of many portfolios, yet tangible supply is limited. ETFs like PSLV provide exposure, but premiums and discounts reveal market sentiment. A 6% discount on PSLV, for example, suggests that sentiment is bottoming out, offering strategic entry points. These instruments track metals closely, but they also expose investors to unique risks, from liquidity to counterparty solvency. Observing premium trends historically, such as anomalies in 2011 and 2020, helps identify tops and bottoms. Strategic investors combine physical holdings with carefully selected equities to navigate this complex landscape, balancing safety, leverage, and market opportunity.
it has gone up. Oops. It has gone, 49% and over from a month ago. Or no, sorry, 55%.
Gone up to $32.
Yeah, 55% in the last month.
Okay. Now then, that would probably be a 4 or 5 or 6 or 7 sigma event. That is really close to a once in a lifetime change. And it may be once in 100 years or once in 500 years change.
Well,
if you
Bob,
were,
I don't mean to interrupt, but silver's up 10% today from $100 at the open.
Yeah.
Oh, that's a
Okay.
That's a lot.
Whoever was short silver or whoever was short calls on silver is getting killed. And that's all happening behind the curtain, and nobody sees that. But market risk is going to turn out to be more dangerous than, I'm sorry, not market risk. Counterparty risk is going to turn out to be more dangerous than market risk. Somebody is getting killed financially. So we look at it and say, oh my God, silver's up $10. That's incredible. Oh, okay, I own a lot of silver. I was buying silver under $4.50 an ounce. For it to go up $10 in a day, I never even anticipated anything like that. So bad things are happening behind the scenes, and we think silver going up $10 in a day is a good thing. but it actually could be a very dangerous thing. However, if gold's expensive and silver's expensive and platinum's expensive and palladium's expensive, and now copper is turned into a precious metal, what can we invest in?
For traders and investors, timing is critical. Market sentiment oscillates between euphoria and panic, creating windows for opportunity. Corrections, when they occur, are brief, but provide clues about underlying strength. Junior miners, overlooked yet undervalued, present some of the largest upside potential. Meanwhile, established producers offer stability, balancing risk exposure. Understanding the broader economic picture, supply chains, geopolitical tensions, and currency shifts is essential before committing capital. Historical patterns from 1980 silver surges to modern ETF dynamics demonstrate that preparation, research, and sentiment analysis can generate outsized returns while mitigating risk in a world where market extremes are increasingly common.
Copper is far more important to the economy. Silver has great importance in some areas, but copper is what makes the economy. They call it Dr. Copper because it tells you what the economy is going to do. But we talk about silver, gold, platinum, palladium, copper. What's cheap? You have the same stair-step type of move. The first commodity to go up was gold, the second was silver, the third was platinum, the fourth was palladium, the fifth is copper. The majors started up months ago. And then we went to the mid-tiers. And literally, I'm going to tell you, today, I went to my account and I am invested virtually all in the juniors. And out of about 30 stocks, I think 2 of them were down. While I am the biggest fan of physical silver and have been advocating buying physical silver and physical platinum for the last year or 2, there just aren't enough real silver stocks to invest in. So I'm invested across the board in gold stocks and the very few silver stocks that you can identify. But the junior miners, the really cheap stuff, are going to be the winners that go up the most. And they will indicate when we're coming to a top. And we absolutely are not coming to a top. I follow the discount premium level of the PSLV. And if you go to Sprott and look at the page for PSLV, it shows you whether PSLV is selling at a premium or a discount. And actually, it's selling at a 6% discount on Friday, which is the biggest discount since March of 2020. So PSLV sentiment is saying we're at the bottom.
The metals market is at a crossroads. Price action, counterparty stress, and global events suggest we may be witnessing a generational opportunity. Record-breaking surges combined with brief but sharp corrections hint at structural shifts in financial and commodity markets. Junior miners, strategic ETFs, and diversified physical holdings offer avenues to capitalize, but risks remain high. Investors must balance optimism with vigilance. Behind every gain lies unseen financial peril. While the next chapters of this metals boom are unwritten, one thing is clear: the rules have changed, and history may remember these moves as among the most consequential in modern financial markets.
Well, here's what's crazy, and I am a giant fan of sentiment. Everybody knows that. The only better time to buy PSLV was in March of 2020 when it went down to 11%. I don't think so, and you just caught me swimming naked. It's not something I'm familiar with, but if you went back to April of 2011, when it hit near $50, the premium was 26%. the interesting thing is that's an anomaly, and I never did figure out what caused it. Now, I wrote a piece on April 25th of 2011, and I said, okay, the Sprott Silver ETF is indicating a top, and that's it hit it to the day. However, the premium actually went up a year later, higher, and I never did figure out why.